Charters. I, Dipesh Majithia, on behalf of JK Classes, is here in front of you to solve May 23 Accountancy RTP, that is Group 1's RTP Chartered. So this is May 23 Group 1 Accounts RTP Chartered. We'll solve the entire RTP. So shall we begin? Yes, sir. Now, without wasting much time, let's just solve the entire RTP now only. Am I clear? Yes. First question is based on presentation and preparation of balance sheet. On 31st of March, Hari Limited provides you with the following particulars. Equity share capital, calls in arrear, that would be adjusted in equity share capital. So that would also come in share capital only. Land and building, plant and machinery and furniture chartered, all these three will come in PP. This will come in reserves and surplus. Loan from State Financial Corporation. If it is a long-term loan, it will go in long-term borrowings. This is a short-term loan, if it will go in short-term borrowings. Inventory will go in current assets. Provision for tax will go in provision. Trade receivables. Advances will go in loans and advances. Profit and loss account, this will also go in reserves and surplus. Cash in hand, cash and cash equivalent, cash at bank, that will also go in cash and cash equivalent. Unsecured loan, trade payables will go in trade payables. 2,500 equity shares were issued for consideration other than cash. Matlab chartered 2,500 shares were given for consideration in which we had not received cash, but we would have received something else. This would go as a disclosure in your schedule note 1 regarding share capital. Debtors of 65,000 included in trade receivables are due for more than 6 months. This is disclosure in your trade receivables. Cost of assets were 7,50,000, plant and machinery is 875, and this is 78,125. This will chartered help us to calculate the accumulated depreciation. The balance of 1,87,500 in the loan with State Financial Corporation is inclusive of 187,500. 187,500 is inclusive of interest 9,375. The loan is secured. Acha. 9,375 is other current liability chartered. Balance this 9,375 is other current liability. So लोन चार्टर्ड, ये लोन है ना, इसको we'll break it into two parts. One is outstanding interest 9,375 and loan would be balance, that is 187,500 minus 9,375, that comes to 188,125. Correct. Bank includes 2,500 with Global Bank, which is not a scheduled bank. You are required to prepare balance sheet of Hari. Am I clear, chartered? Yes, no. So let's start solving. So that is May 2023 RTP accounting that is basically group 1. Correct? Now let's solve solution to question 1. Solution to question 1. Now, notes to accounts. You can leave one page for balance sheet. You can leave one page for the balance sheet and then write down notes to accounts. Notes to accounts. Amount. Correct. First note is of share capital. First note is of share capital. Share capital. In that we have equity share capital. Equity share capital. In that also we have got issued, subscribed and called up capital. And called up capital. In that we'll write down 12,500 equity shares of rupees 100 each, that is 12,50,000 out of above 2,500 shares. 2,500 shares have been issued for consideration other than cash. Correct? Less calls in arrear. One two 50 shares. So that gives you 12, 48, 750. 12, 48, 750. Now charted. So this was your share capital charted. Second is note 2. Note 2 will be of reserves and surplus. Reserves and surplus mein we have got two, one is general reserve and one is P&L account. We have got two, one is general reserve and one is P&L account. General reserve is 262,500 and surplus PL account balance, that is your surplus. Reserves and surplus ka, this is surplus. Up PL is known as surplus and rest all are known as reserves. So that is why together it is known as reserves and surplus. 1,08,375. So that we come to, we have finished reserves and surplus total 370, 875. 370, 875. Correct. After reserves and surplus, we have got non-current liability. Chartered non-current liability mein there is B, D, O, P. B stands for borrowings. We have deferred tax. We don't have long-term borrowings. O, other current liabilities. Long-term. We don't have. Other current liabilities long-term. Sorry, we have. And then provisions we don't have. So we are supposed to prepare two notes. One is long-term borrowings and one is other current liabilities. We have got B, D, O, P. B stands for borrowing, D stands for deferred tax, O stands for other non-current liability and P stands for provision. Chartered, we don't have any of these. We don't have any of these borrowings, deferred tax, other non-current liabilities and provision. We don't have any. Correct? Chaliye. So let's move ahead. We will go ahead with number 3, long-term borrowings. That interest outstanding will be considered as short term, that is current liability, other current liability. Number 3, long term borrowings. Long term borrowings. Long term borrowings maybe you've got secured loan. In that secured loan, we have got State Financial Corporation, loan from State Financial Corporation. We have got a loan of 1,87,500 minus 9,375 for interest. So loan is how much? 178, 125. Then we have got unsecured loan of 151, 250. Now over here, let me write secured by hypothecation of plant and machinery. That means if we fail to repay the loan, SFC, State Financial Corporation, has got the right to sell our plant and machinery and recover the money. Hypothecation matlab they've got the right to sell that asset. Am I clear? Total unsecured loan has become how much? 1,3,250 है तो 329. Now charted current liability में will come. Current liability में it is BTOP. Non-current में it was BDOP. So this is borrowing. Short-term borrowings we have. Yes. No. Borrowings नहीं है. Trade payables we have. Yes. Other current liabilities we have. Yes. And provisions we have. But trade payable का तो कोई trade payable we do not have. एक ही item है. Only one item is there, so we will not prepare the note. Provision also we have to prepare the note. Correct. So number 4. So BTOP. Borrowings, trade payables, others and provision का notes will prepare. Rest is one item, so note we need not prepare. Correct. So other current liabilities. Sir, how do you know that whose note you are supposed to prepare? Like trade payable, it is appearing in the trial balance as trade payable only. Then we need not prepare the note. But other current liability has an item included which is interest. So we'll prepare the note. Am I clear? Interest, accrued interest, accrued interest on loan from SFC. That is how much? Then we have got short-term provisions. Short-term provisions. Short-term provision में we have provision for taxation. Provision for taxation, that is how much? 1,60,000. Correct. Now we come to asset. Asset में we have got non-current assets. Liabilities over. Assets में have got non-current asset. Non-current asset में आता है PPE and intangible. हम लोग बोलते पिडलो. PIDLO. That is वैसे याद रखते PP and intangibles. This is investments, for tax, loans and advances, and others. We have only PPE charted. We have only PPE. Correct. Now 6. Now charted, every item's original cost is given. Every item's original cost is given. So we'll take land. Land and building original cost 7,50,000. This is given in adjustment less depreciation that I don't know. Now charted, ध्यान से देखिए, यहाँ पे दिया 7,50,000. If you go into this, over here it is given land 86,87,500. तो difference is depreciation. ठीक है ना? Now, तो 687,500. तो depreciation balancing figure 7,50,000 minus 687,500 is 62,500. Correct? Then plant and machinery. Plant and machinery, it is how much? 8,75,000 less depreciation, but outer column is 656, trial balance में 656 250. तो balancing is how much? 2,18,750. 2,18,750 का depreciation. Balancing figure, that is balancing figure charted. Am I clear? After that, furniture and fittings. Furniture and fittings 78,125 less depreciation, I don't know, but outer column is 62,500. So 78,125 से 62,500. How it happened? Sir, the difference is 15,625. This is depreciation, which they had already charged. We have just found out. So PP is also done. So current assets में charted, we have now IIT Silo. IIT Silo, that is investment inventory, trade receivables, cash and cash equivalent, loans and advances and others. ठीक है ना? IIT Silo. So first we start with inventory. Do we have inventory? Yes, inventory is there. So number 7. Inventories. Inventories may we have got 2 items. Inventories of raw material. Inventories of raw material, that is 62,500, and thereafter inventory of finished goods. 2,50,000, 3,12,500. Correct? Inventories is done. After inventory, IIT. T is trade receivables. ट्रेड रिसीवेबल्स में वी हैव गॉट दोज डेटर्स over here. You can see 65,000 are due for more than 6 months and total trade receivables are 2,50,000. So remaining are less than 6 months. So we are supposed to show the bifurcation. We will show separately. हाँ sir. Outstanding we will show separately. Outstanding for period, outstanding for greater than 6 months, 65, others, we can call it others less than, total is 2,50,000, total 250. So this one will become 250 minus 65, that is 185 balancing. Total is 2,50,000. Okay sir. Trade receivables be done. After the IIT CLO, C is cash and cash equivalent. Cash and equivalent. Cash and cash equivalent. Cash and cash equivalent में we've got cash at bank, cash at bank में with others, which is not scheduled bank, that is with schedule or scheduled bank. Scheduled bank मतलब those bank which are covered by RBI. RBI rule 2 में covered है. They are covered in RBI rule 2 with others. Others मतलब we have got no global bank. How much? 306,250 and 2,500. So that will become 308,750. Cash in hand is 37,500. Okay, let's do it like this. And cash in hand को so total will become 346,250. So that is your cash and cash equivalent. Now chartered will prepare balance sheet. Now we will prepare balance sheet. You had left initially one page, in that page you will write balance sheet. Hari Limited, balance sheet, particulars, notes, amount. Previous years is not required. You can see institute has also not given. Previous years is not required. You can see institute has also not given, only current year. Now, first we write is equity and liability. Equity and liability में we have first shareholders fund A. One. Note 1 में how much it is? 1248 750. Then B. Reserves and surplus. Number 2. 370 875. We will prepare note of only those items which are there in question, and in balance sheet also we will write only those headings which are there. Correct? Thereafter. Number 2. Non-current liabilities. A. Long-term borrowings. 3. Tell me, what is the third one? 329 375. 329 375 is my borrowings. Thereafter, current liability. Current liability mein what do you have? A. Trade payables. B. TOP. Short term borrowings are not there. Trade payables. Trade payables ka note we are not prepared, but total value of trade payables is given in the balance sheet. How much? 2,50,000. Thereafter B. BTO. Other current liabilities. Other current liabilities number 4. How much? Short-term provisions. We had got provision for tax. Short-term provisions. Short-term provision 1,60,000. Correct? Now, this is your liability. Liability ka total is coming to 23,68,375. Now, let's go to assets. Assets started. We have first non-current assets. In that also PPE. Note 6. PPE may we have 14,06,250. The total 14,06,250. Correct? After PPE, number 2. Current assets. Current assets may we have got A. Inventories. 7. That is how much? 3,12,500. Thereafter B. B is inventories के बाद we have got trade receivables. Trade receivables 8. 2,50,000. Cash and cash equivalent. Equivalent. How much? 9. 346. 250. Short term. Loans and advances. That is directly given in the trial balance 53,375. Now the total comes to 23 375. Correct? Now, non-current liability is B top, borrowings deferred others provision. Current liability is B top, borrowings trade payables others provision. But in deferred tax की जगह, instead of deferred tax we'll have trade payables, long term borrowing, short term borrowing, other non-current liability, other current liability, long term provision, short term provision. Non-current assets are PIDLO. That is PPE and intangibles. This is investments, deferred tax, loans and advances, long term, others. Current asset में chartered CLO. Investment, inventory, trade receivables, cash and cash equivalent, loans and advances, others. So this is your structure of the balance sheet chart. Am I clear? Yes or no? Yes, sir. Correct. So those items, heading is directly given, don't prepare a note. But if there is a heading and inside that any item is given, prepare the note for it. Am I clear? Avoid doing this sum. It takes a lot of time in the examination. If you are not left with any option, then definitely go ahead. The advantage of this question is that there are hardly any chances of losing any marks. You're just supposed to present the question neatly. Am I clear? Managerial remuneration. Second question. Managerial remuneration company accounts may is divided into two parts. If the profits are adequate, we calculate managerial remuneration on basis of net profit. If the profits are adequate, we calculate managerial remuneration on the basis of net profit. And if the profits are not adequate, we calculate managerial remuneration on the basis of effective capital. If you look at the question on the screen, some capital ka drama is given. So over here, we are supposed to calculate managerial remuneration based on effective capital. Effective capital, how do we calculate? If it is a non-investing company, we take share capital, reserves and surplus excluding revaluation reserves, all long-term borrowings less fictitious asset. Share capital, reserves and surplus excluding capital reserve, all long-term borrowings less fictitious asset. Correct? And less investment if it is a non-investing company. If it is an investing company, then we do not subtract investments. If it is an investing company, we do not subtract investments. Why? Because for non-investing company, investment is not a business asset. For non-investing company, investment is not a business asset. But for Motilal Oswal, for HDFC Securities, for ICICI Direct, for Sher Khan, all broking firms you would have heard, financing firms chartered, investment is their stock in trade. Therefore, we do not remove investment. Are you clear? But for non-investing company, investment is not a business related asset, it's an investing activity. So for non-investing company, we remove investments And for investing company, we do not remove investment because investment acts as their stock in trade. Correct. Authorized capital we are not interested. Issued share suspense. Reserves and surplus में capital reserve 2,50,000 is revaluation reserve will not take. Security premium will take. Secured loan में debentures, unsecured loan, public deposit will take cash and this will not take. Why? This is overdraft, current liabilities will not take. Investment in shares and debenture, profit and loss account, revaluation reserve will not take. Share suspense account represents money received on allotment which is yet to be made. Money received, but we have not allotted the shares. This is not share capital, so we will not consider share suspense also. Money is received, but shares are not allotted. So this is not a share capital, hence we will not consider. You are required to compute effective capital as per the provisions of Schedule 5 of Omega. Schedule 5, if Omega Limited is a non-investing company, will your answer differ if Omega Limited is an investing company? So chartered, let's calculate under both. Solution. To question 2, that is based on managerial remuneration. That is calculation of effective capital. Calculation of effective capital. Now charted, effective capital. Particulars amount. First we'll calculate for investing company. Investing company में 14% preference, preferential capital 38,75,000. Equity share capital 216 lakh, that is 2 crores 16 lakhs. Capital reserve is 188,750, that is excluding revaluation reserve. Security premium 1,12,500. Now 438,750 minus 2,50,000. That will give you 188,750. 438,750 minus 2,50,000. Correct? 438,750 minus revaluation reserve 2,50,000. Correct है. Security premium के बाद 15% debentures. 15% debentures 8,32,500. Deposits public deposits, debenture is, debenture amount is 46,25,000. Deposit is 8,32,500. Correct? Less PL debit balance. This is our fictitious assets. How much? 34 lakhs 25,000. Correct, chatted? 34 lakhs 25,000. This will take up, this will give us effective capital for investing company. 3 crores 78,08,750. इन्वेस्टिंग कंपनी के लिए लेस, नॉन इन्वेस्टिंग के लिए विल सब्ट्रैक्ट इन्वेस्टमेंट्स ऑल्सो. Why? Because investments are non-trade assets. Investments will subtract. How much? 3425. So, effective capital for non-investing company. This is investment 1 crore 75 lakhs 25,000. So 2 crores 2 lakhs 83,750. Correct, chartered. Effective capital and there is remuneration based on effective capital. Please learn that, it will help you in the examination. Correct, chartered. Question number 3, that is based on cash flow statement. In cash flow statement we have got two methods, one is direct method, one is indirect method. If PL account or details of sales, if trading PL or details of sales is given, then we go for direct method, otherwise indirect method. Over here we have only balance sheet and we do not have any PL account. That means we are supposed to follow indirect method. Until unless PL is there or details of items of PL is given, we do not follow direct method. Correct? From the following balance sheet, you are required to prepare cash flow statement using indirect method. That is also wonderful. Shareholders fund, share capital. Remember, charted, this is opening balance, this is closing balance. Share capital fund ab initio, if you look, you will see there is a change in capital. This is change in reserves. So we can say net profit for starting point is 10,000. Cash flow from operating activities में net profit 10,000. Trade payables 60 से 90, so increase in trade payables 90,000. Short term provisions, opening balance is provision for tax, opening balance is paid off. Opening balance is paid off in operating activities and closing balance is transferred to PL debit. Closing balance is transferred to PL debit, so we add in operating activities. Correct? Increase in trade payables matlab add in operating. Correct na? Because if you remember, add operating activity में, in operating activity add decrease in current assets, increase in current liability, less increase in current assets and decrease in current liability. Correct? Now, this we do in operating activities. Provision for tax, if you know how to prepare account, also we used to prepare account and do it. Opening balance 5,000, that is paid off, and closing balance 8,000, that is created through P&L. This is your provision for tax. Correct? Now, non-current assets PPE, ab initio it looks that there is a purchase. Inventory increase by 70. Trade receivables increase by, it will be subtracted. Cash and cash equivalent, last item, other current assets increase by 40, 30, increase by how much? 33. Correct? All this will increase, will go in operating activity. Share capital, equity share capital, issue of share capital 2,10,000, issue of preference share capital 50. Correct? Reserves and surplus 25, add profit 20, less dividend 10, surplus 35, 25. Here I am not interested in this drama. Dividend 10,000, depreciation 40,000. Now charted, cash flow statement matlab, we divide cash flow into three parts. We start business with capital. We invest that, we start business with capital. We invest that capital in assets. And with that assets, we do business to earn profit. We start business with capital, that capital we invest in assets, and with assets we do business to earn profits. So, any inflow or outflow of cash, any inflow or outflow of cash because of capital is known as financing activity. We finance our business through capital, invest in our assets and do business, that is operating activity. So, this is the first activity we do, this is we write second and this is we write third. So, any inflow or outflow relating to profit, business, that is operating activity. Any inflow or outflow of cash because of assets, that is investing activity, and any inflow or outflow of cash because of capital, that is financing activity. We start our business with capital, finance it in assets, invest it in assets. With those assets, we do business to earn profit. So, there is first capital, second assets, third profit. We start with profit, then assets and then financing. Am I clear? That is how three activities have come in AS3. Correct? Now, so how do we go about? Started. First, looking at the question, I felt we should do solution to question 3. Solution to question 3 is cash flow statement, where we do working note number 1. For property, plant and equipment account. property, plant and equipment, according to the question, opening balance of asset is 1,80,000. Closing balance of asset is 3,50,000 and depreciation according to adjustment is depreciation at 40. So we can conclude that there is a purchase of 2,10,000. Correct? Now charted. Operating activity, investing activity, and financing activity. Correct? And thereafter we prepare CFS, cash flow statement, as per AS3. That is cash flow from operating activity, cash flow from investing activity, cash flow from financing activity, opening cash and cash equivalent, that is closing cash and cash equivalent 1 plus 2 plus 3 plus 4. Correct? Now, let's start the question. First thing which we see in the question is shareholders fund. Shareholders fund, there are two items, that is issue of shares. Shares are increasing by 2,60,000. From 3 lakh it is becoming 5 lakh. So that is financing activity. So I'll write issue of equity shares, two lakh 10, issue of preference shares 50,000. Correct? Total is 2,60,000. Then we have got reserves and surplus from 25 to 35. So we'll write net profit 35 minus 25 10,000. Correct? In 1, 2, 3, 4, 5, 6, 7, 8, and 2. Now, their net profit before tax and extraordinary item. Correct? Adjustments. In these two lines which I have written, there can be only two items, that is tax and dividend. Adjustments. After that, you have got working capital changes. After working capital changes, after working capital changes, you will have cash used in operating activities less tax paid, less tax paid, that will become net cash used in operating activities. Over here you can have only two items, that is dividend and provision for tax. Correct? So this is the structure. Adjustment, I left one line because I saw only one adjustment, that is depreciation. Working capital, I saw all my current assets and current liabilities, they are around 6, 7, so I left that many lines. Correct? Now the share capital we have done, issue of shares, reserves and surplus. Trade payables from 60 it has become 150. So increase in trade payables. Increase in trade payables is how much? 90,000. Thereafter, short-term provision, that is provision for tax, opening balance 5,000 will be paid off. So I am paying it off over a year. Operating activities, less tax paid and chartered closing balance is declared. So we'll add that. Correct? Now, thereafter, question we have got PPE may we have found out purchase of PPE. negative 2 lakh 10, and we have found in that account depreciation 40,000 will add. Depreciation 40,000 will add. Then current assets may increase in inventory. Increase in inventory. How much? 70,000. That you will subtract. Increase in inventory, then increase in trade receivables 75, that also will subtract. Cash and cash equivalent opening is how much? 90, and closing is 1 lakh 5. In my cash flow statement I wrote it off. Other current assets, that is again increase in other current assets. How much? 33,000. Share capital done. Dividend is how much? 10. Dividend 10 we have paid, so dividend declared. So dividend kind is PL to dividend. So P&L में 2 dividend that we have added back, and over here we'll write dividend paid. PL debit side, it's a non-operating, so we added back, and it's a financing, so we are subtracting here. So this becomes 28, 68, and this will come 20, negative 20, negative 25. This negative 25 I will carry forward here. Investing activities negative 2 lakh 10, that I will carry forward here. And financing activity there is positive 2 lakh 50. So positive 250, positive 40, positive 15, and that's tallied. So if you prepare in a table, it becomes little confusing. If you prepare like this, you can go on reading the items and go on pasting them charted. So first I saw share capital I wrote, then I saw net profit I wrote, then I saw changes in working capital I wrote, then I went to asset I wrote. So whatever you see charted in the question, just go on posting them. Am I clear? Question number 4, profit prior to incorporation. Simple. Messrs. New Venture, who was carrying on business on 1st of June 2021. Date of purchase was incorporated on 1st October. The first accounts are drawn up to 31st of March. So 1st June ko business started. 1st October is date of incorporation and year end is 31st of March. So June to 31st October charted it is 10 months. So this entire sum is of only 10 months. The gross profit is 1 lakh 20. General expenses will be distributed in time ratio. Directors fees is 24,000 per annum. This will go in post. Incorporation expenses 4,000, that will also go in post because this is company related expenses. Any company related expenses will go in post. Rent up to 31st December. Rent up to 31st of December was 600 per annum. 600 per annum means 600 divided by 500 per month. After which it was increased to 8,000 per annum. That is 8,012 is equal to 8,000 is equal to, or you keep it 8,000 by 12 only. Otherwise it will come to 66.67. Salary of the manager who upon incorporation was made director at 12,000 per annum. That is 1,000 per month. And that will come in post. Advertisement expense post. Bad debt sales ratio. Correct. Bad debts is related to debtors. Debtors are related to sales. Therefore, that will come in sales ratio. Advertisement expenses pertains to the incorporated company. Matlab chartered, this is related to company. Since it is related to company, it will come only in the post period. Give statement showing pre and post incorporation profit. Net sales are 20 lakhs. Average month, the monthly average of which for first 4 months, monthly average of which for the first 4 months is one half of the remaining period. The monthly average for first 4 months is one half. One half means half of that remaining period. Remaining period is how much? 6 months. So 6 months mein whatever was the sales each month, uska half is there in the first 4 months. Correct? So any expenses related to the company will come in the post period. So general expenses comes in time ratio. It is an admin expenses. Any expenses related to administration will come in time ratio. Directors is in company, so it will come in post period. Incorporation of company, so it will come in post period. Rent ka we will do a working note. Salary of the manager who upon incorporation of the company was made director is 12,000 per annum. So salary of manager will be 1,000 per month, and that will also come in post. His remuneration as director is included in the figure of above sales. His remuneration as director. So when he became director, it is included here. So I am interested in the manager. Manager ka salary was how much? 12,000 per annum. That is 1,000 per month, and that will come in the pre-period, because he was a manager in the pre-period and a director in the post-period. His director's part is included in the director's fees. So manager wala part I will include in the pre-period over here. Am I clear? Huh. Advertisement pertains to incorporated company, so it is only related to company. So it will come in post, sales ratio. And bad debts is related to debtors. Debtors will come in sales ratio. Correct? Now, solution. Solution to question 7. Step 1. calculations. कैलकुलेशन में फर्स्ट विल कैलकुलेट time ratio. Now charted pre-period is equal to year starting, that is 1st of June to date of incorporation, that is for 30th of (2021), that is 4 months. Post period is equal to 1st October 2021 to 31st of March 2022, that is 6 months. Therefore, time ratio is equal to 2:3. Number 2. Sales ratio. Now charted sales in the first, it is given that let average monthly sales, let the average monthly sales be rupees X in first, let the average monthly sales be rupees X in the first 4 months. Therefore, average monthly sales is equal to rupees 2x in next 6 months. Correct, because whatever is the sales in the last half, its half is there in the first half. If last 6 months mein it was x, then first 4 months mein it is half of x, that is 0.5x. That means first 4 months ka sale is half of last 6 months ka sale. First 4 months ka sale is half of last 6 months ka sale. Or I can say last 6 months ka sale is double the first 4 months ka sale. So if first 4 months ka sale I have assumed as x, then next 6 months ka sale will be double of that, that is 2x. Correct? Now, therefore pre, post. Months, 4 months, 6 months. Sales per month, x, 2x. Total 4x, 12x, 1:3. The sales ratio is charted 1:3. Now, rent. You're starting from 1st June. June, July, August, September, October, November, December, January, February, March. This is pre-period up to 30th of September, and thereafter post. Rent may it is stated that it is 500 per month up to December. So 500, 500, 500, 500, 500, 500, 500. Then 8,000 per month. Therefore 1 month ka 8,000 divided by 12, 8,000 divided by 12 and 8,000 divided by 12. Therefore chartered pre is equal to 500 into 4 months is 2. Post is equal to 500 into 3 months plus 8,000 divided by 12 into 3 months. That is 2,000 is 2. 1,500 plus 3 1 ja 3 4 ja 4 2,000. It is 2,000 in the pre-period and 3,500 in the post-period. 3,000 in the pre-period and 3,500 in the post-period chartered. Am I clear? So rent also we have done. Now chartered. Correct? Now. So statement of P&L. Particulars. Total. Ratio. Pre-post. Now charted. First is gross profit. Gross profit is how much? 1,20,000. Sales ratio. Sales ratio is 1:3. $30,000, $90,000. Thereafter, less. First expense is what? General expense. First expense is general expense. General expense. General expense is 24,000 and that will be in time ratio. Time ratio of 2:3. 2:3. 5, that is 9,600, 14,400. Thereafter, director's fees. Director's fees is 24,000 per. Director's fees is 24,000 per annum. I want only in the post period. 24,000 for 12 months. I want only for 6 months. That is total 12,000 come in post period. Correct? How did you get 12,000? 24,000 divided by 12 months into 6 months. Correct? After director's fees, you have got incorporation expense. Incorporation expense is how much? 12,000, 4,000. That will also come in post. That is related to company. Thereafter, rent 5,500. Working note number 3, that is 2,000, 3,500. After rent, manager's salary. Manager's salary is also 12,000 per annum. But I want 12,000 per annum. I want only for pre-period. Pre-period is of 4 months. So 12,000 divided by 12, 4,000. That will come in the pre-period. Correct? After that, advertisement expense. Advertisement expense. How much? Advertisement expenses 5,000. But since it is incurred by the company, therefore it will come in post. Otherwise, advertisement will be distributed in sales ratio. How much? 5,000. Thereafter, bad debts 1,000. Sales ratio 1:3. Sorry. Sales ratio 4,000, 1,000, 3,000. Now chart. Capital reserve pre में 13,000 and PL account total profit 61,500, out of which pre is 13,400 and post will be transferred to P&L account. PL account is 48,100. Correct chartered? Yes, no. So this is your profit prior to incorporation. Full sum. Correct. If you want, you can do your director's fees and manager's salary ka working note, but I feel it is fine. Am I clear? But make it neat and presentable. Question number 5. Accounting for bonus issue. Simple chapter. Bonus issue में first which reserve? CRR. Second which reserve you will use? Security premium. Third, capital reserve. Fourth, divisible profits. Divisible profits में which reserves? Divisible profits में you will use in the order GRRDP. GRRDP, General Reserve, Reserve Fund, Revenue Reserve, Divisible Profits and PL account. Capital Redemption Reserve, Security Premium, Capital Reserve. Then Divisible Profits. Divisible Profits का order is G, General Reserve, Reserve Fund, Revenue Reserve, Divisible Profits and PL account. Sorry, Dividend Equalization Fund and PL account. Correct, but remember, security premium and capital reserve should be realized in cash. Security premium and capital reserve should be realized in cash. Chalo, 9,000 equity shares of rupees 100 each, 9 lakh. Capital reserve including 180,000 being profit on sale of plant. So we can use only 80. We can use only 80 because that is realized in cash. 1 lakh is remaining capital reserve which we cannot use. 80,000 being profit on sale, so that can be used. Security premium, capital redemption reserve, general reserve, PL balance. The company decided to issue bonus shares to equity shareholders at the rate of 1 share for every 3 shares held. 1 by 3 is the bonus issue, so 9 lakhs ka 1/3 is 3 lakhs. 3 lakhs we want, so we'll take first from CRR how much? Then security premium how much? 80. Then capital reserve how much? 80. So 162.20. Then general reserve balancing figure 80. So total is become 3 lakhs. Past journal entry. Now chartered solution to question number 5. in the books of Satish Limited. Capital Redemption Reserve account debit. How much? 60,000. Then security premium account debit. How much? 80,000. Then capital reserve account debit. Capital reserve account debit. How much? 80,000. Then general reserve account debit. How much? 80,000. This is balancing figure. To bonus to equity shareholders, 3 lakhs. How did you get 3 lakhs? 1/3 into 9 lakhs. Being bonus declared. Correct? B. Bonus to equity shareholder account 3 lakhs. 2. To equity share capital 3 lakhs. Being bonus shares issued. Correct, chartered? So this is your bonus done. Now, yeah, instead of general reserve, we can use P&L also. P&L can also be used. Am I clear? Yes or no? Yes, sir. Question number 6. A company having 1 lakh shares of rupees 10 each as its share capital, having a market value of 46, issues right shares. What are right shares? Right shares are fresh issue of equity shares. Right shares are fresh issue of equity shares to its existing shareholders in the ratio of 1:10. For every 10 share, 1 right share. At a price of 31, that means 10 rupees is the face value. 10 rupees is the face value and 21 is equal to security premium. You're supposed to pass a journal entry. Now charted. Number of shares issued is equal to 1/10. 1 lakh shares. Nominal value 21. Nominal value 10. Security premium 21. bank account debit. Bank account debit 1 lakh into 1 lakh shares of rupees 10,000 only, no? This is 1 lakh, that will come to 10,000 shares. So 10,000 shares into 10, how much? 1 lakh. 10,000 into 31, 10,000 shares into 31, 3,10,000. To security premium account, 10,000 shares into 21, 2,10,000. To ESC, equity share capital, 10,000 shares into rupees 10, 1 lakh. Being a right issue made of 10,000 shares at rupees 31. Correct chartered? Yes or no? Yes, sir. So there were 1 lakh shares. On 1 lakh shares, 1:10 का ratio में right shares are offered. That is 10,000 shares are offered. Each share is offered for 31, out of which 10 rupees is nominal value, 21 is security premium. Correct? Now question number 7 chartered. Redemption of preference share, question number 7. A. The board of directors decided to issue minimum equity shares of rupees 9 each. Of rupees 9 each means 9 rupees is the face value of the shares. To redeem rupees 2,50,000 preference shares. Correct? The maximum amount of divisible profits available for redemption is 1,50,000. Maximum amount of divisible profits. From divisible profits chartered, we create CRR, Capital Redemption Reserve. Since divisible profits is only 1,50,000, we cannot create CRR more than 1,50,000. Calculate the number of shares issued by the company to ensure that the provisions of section 55 are not violated. Also, determine the number of shares if the company decides to issue it in multiples of rupees 50 only. Correct? Now chartered. Solution. Question number 7A. Now, maximum CRR, maximum CRR possible is equal to total of all divisible profits is equal to rupees 1,50,000. Correct? Now, since CRR is equal to nominal value of PSR. PSR is preference shares redeemed. CRR is equal to nominal value of preference shares redeemed minus paid up value PUV, paid up value of fresh issue of shares. I repeat, CRR is equal to nominal value, that is face value, of preference shares redeemed. PSR, preference shares redeemed, minus paid up value PUV is equal to paid up value of FIS, fresh issue of shares. Correct? Now, CRR is 1,50,000. Nominal value of fresh issue, nominal value of preference shares redeemed is how much? Rupees 2,50,000 preference minus paid up value of fresh issue of shares. Therefore, paid up value of fresh issue of shares is equal to 2,50,000 minus 1,50,000 is equal to 1 lakh. Correct? Therefore, now charted paid up value of fresh issue is equal to number of equity shares issued into rupees 9 is equal to 1 lakh. Therefore, number of equity shares issued is equal to 1 lakh divided by rupees 9 is equal to 11,111.11 shares. We cannot issue less shares. We always have to issue more shares. Therefore, this will become 11,112 equity shares. Correct? Now, since number of equity shares to be issued should be in multiple of 50, therefore 11,150. Next multiple of 50 is 11,150 equity shares should be issued. Since number of equity shares to be issued, number of equity shares to be issued should be in multiple of 50, therefore 11. Next, ऊपर जाने का है. We should always go above. We cannot decrease the number of shares. If you decrease the number of shares, CRR will increase. And CRR, we cannot create more than 150. We can create less than 150. अच्छा, number of shares will decrease. Then CRR will increase. But CRR can be maximum 1,50,000. So we cannot decrease number of shares, we can increase number of shares. If we increase number of shares, CRR can decrease. Am I clear? Now see you with question number 7B chartered. Make Limited had 6,014% redeemable preference shares of rupees 100 each fully paid. The company had to redeem these shares at a premium of 10%. 100 rupees is the nominal value. 10% premium, therefore PRPS is equal to, PRPS means premium on redemption of preference shares. Premium on redemption of preference shares is 10% of 100, that is rupees 10. PRPS means premium on redemption of preference shares. It was decided by the company to issue 50,000 equity shares of 10 each, 2,000 debentures of 100 each. The issue was fully subscribed, the amount is received in full, the payment was duly made, the company had sufficient profits. Profit means PL account. So only one reserve is there, PL account. Solution to question 7b. Solution to question 7b. Step 1. Calculations. Calculations charted number 1. Calculation of PRPS. How many preference shares are redeemed? 6,000 shares. 6,000 preference shares are redeemed. Each preference share ka premium is 10, so total will become 60,000, and this will take it from P&L. Why? Because that is the only divisible profits we have. PRPS, premium on redemption, should be taken from divisible profit until and unless it is specified in the question that we can use security premium. Security premium can be used by unlisted companies, that is those companies which are not covered under section 133. You can write down, security premium can be used by unlisted companies which are not covered under section 133. Correct or no? This is listed company. Listed company will use divisible profits first. Correct. So security premium only if it is mentioned in the. So first security premium, then divisible profit by unlisted. But if nothing is mentioned, what will we assume? Listed company. Listed company will use PL. What we are assuming? Listed company. Listed company will use PL first. Number 2. Calculation of CRR. Nominal value of preference shares redeemed is equal to 6,000 shares into 100, 6 lakhs. Paid up value of fresh issue of shares, excluding premium. How many shares are fresh issue? 5,000. Sorry, 50,000. Therefore, CRR this will be by from PL account. Now, out of this 60,000, note लिखा दो. If company is not covered under section 133, then use security premium then use, then first use security premium, then use divisible profits. If the company is not covered under section 133, means those companies which are unlisted, and we are assuming this is a listed company. We are assuming we are doing it for a listed company. Correct? So, sir, when we will assume it's an unlisted company? When it is specified in the question. Otherwise, we'll always assume it's a listed company. The company is covered under section 133. Step 2. In the books of Make Limited. In the books of Make Limited. When we start journal entries, first what we will do? First chartered we will create, we'll arrange money. First we'll arrange money. So arranging of money. First we'll always arrange money. That means we'll get money for redemption. First we'll always arrange money. How will we arrange money? Over here we are arranging money by issue of shares and issue of debentures. We can arrange money by issue of shares, issue of debentures, sale of assets, sale of investment, recovery of calls in arrear, making partly paid up shares fully paid up, calls in arrear wala shares forfeiting and reissue. So issue of shares, issue of debentures, sale of fixed assets, sale of investments, making partly paid up shares fully paid up, recovery of calls in arrear, share forfeiture and reissue. There are so many ways we can arrange money. Correct? So bank to equity share capital 5 lakhs being equity shares issued. Second is debentures issued, bank to 12% debentures, two lakhs. After arranging of money, we'll write off premium on redemption of preference shares. That is 60,000 from PL account. So PL to premium on redemption of preference shares. Then we'll create CRR. CRR is created 1 lakh out of PL only. Then payable due entry we say. Preference share capital 6 lakhs we are supposed to pay. Premium on redemption of preference shares 60,000 we are supposed to pay to preference share holder. Paid preference shareholder to bank. Correct. So first arrange the money, then PRPS, CRR, payable, paid, last is can be bonus shares, issue of bonus shares if it is there in the question. This sequence will never change. Correct. Institute and its material have followed this sequence only. Am I clear? Now chartered question number 8. Alpha Limited listed company issued 3 lakh 5% debentures on 30th September 2000 on which interest is payable half yearly on 31st of March and 30th September. The company has the power to purchase debentures in open market for immediate cancellation. The following purchases were made during the year ended 31st of March 02 and the cancellation were made on the same day. Now, when you purchase own debentures and cancel, the journal entry is own debenture account debit, interest on own debenture debit to bank and debenture to own debenture to profit on cancellation. POC is profit on cancellation. If the question does, OD stands for own debenture. Own debenture you purchase, interest you paid to bank, debenture to own debenture to profit on cancellation. If the question does not ask to prepare own debenture account, then you can combine these two entries. First and the second entry you can combine. Correct? If the question does not ask own debenture. The company has the power and the cancellation was made. On 31st December, investments had been made for the purpose of redemption. This is DRRI. DRRI, that should be 15% of investment. It's a listed company, so DRRI they have created. 1st March, rupees 50,000 nominal value purchase for 49,450 x interest. 1st March ko you purchase. From whomever you purchase chartered, that person would have received interest till 30th September. From whomever you purchase chartered, that person would have received interest till 30th September. So October, November, December, January, February, 5 months ka interest you are supposed to pay him. How many months ka interest? 5 months ka interest. Correct. From whomever you are purchasing on 1st March. Before 1st March, the previous date of interest was 30th September. So 30th September 2001, he would have received interest. Let's assume Ram. You are purchasing from Ram. So Ram would have received interest on 30th September 01. 30th September 01 to 1st March 02, that is October, November, December, January, February. 5 months ka interest you are supposed to pay at the rate of 5% on 50,000. Calculate 5%. 5% on 50,000 into 5 divided by 12. 1041.66, that is 1042. Correct? This is X interest, so life is beautiful. 1st September 2002, 40,000 nominal value purchase for 4250 come interest. Come interest means including. 1st September. Again, let me tell you, after 1st of March, there is 31st of March interest ka date. So, company would have given interest to everybody. Now, from whomever you are purchasing, he would have received last interest on 31st of March. From whomever you are purchasing, beta, he would have last received interest on 31st of March. Correct? 31st of March ke baad April, May, June, July, August. 5 months ka interest. Calculate 40,000. Sorry. 40,000 into 5%. into 5 divided by 12. 833.33. So this value will become 40,250 minus 834. 834. 39416. 1042 plus 834. 1042 plus 834. 1876 is the total interest, correct? So this was come interest of 5 months ka interest is coming to 834. This is come interest. So from that I subtracted interest to get the own debenture value. Prepare debenture account and own debenture investment account. No problem, chartered. Solution to question number 8. First we'll prepare 5% debenture account. 5% debenture account for year ended 31st December. Year ending is 31st December 2002. Date, particulars, correct, and then own debenture account. Date, particulars, nominal value, cost, interest, date, particulars, nominal value, correct. Now charted 1st January by balance brought down. How much? 3 lakhs. Now charted on 1st of March you purchased. On 1st of March you purchased, correct? So 1st of March when you purchased, what entry will pass? Own debenture, interest, to bank, own debenture, 1st March. How much? X interest is 49,450. And interest we had already calculated how much? 1042. So this is purchase of own debentures account debit, interest on own debentures account debit to bank. Now this is cancelled. So entry is debenture to own debenture to profit on cancellation. 1st March to own debenture 49,250 to profit on cancellation. That is 50,000 ki liability, you are paying off only 49,450. So there is a gain of 550. Now when you are cancelling debenture to own debentures to profit on cancellation, 50,000 ka liability you paid 49,450, so 550 is gain. Now 5% debenture में you wrote to own debenture, तो own debenture में you write buy debenture. Correct? Thereafter. Thereafter chartered again 1st September. You purchase, so to bank. How much did you purchase? 40,000 nominal value. Interest is 834. Interest is 834. We calculated that 40,250 minus 834. That is 39,416. That we had already calculated. Can you see? Again same logic. 1st of September to own debenture 39,6 and to profit on cancellation 40,000 ki liability and we are paying only 39,416. So 584. सेम डबल पोस्टिंग डिबेंचर में टू ओन डिबेंचर, तो ओन डिबेंचर में बाय डिबेंचर 40,000 and 39,416. Correct? 31st December. The balance carried down. Out of 3,90,000 ka debentures you have redeemed, so you are left with 2,10,000. First time you redeemed 50,000, second time you redeemed 40. So out of 3,50,000 plus 40, 90 you have redeemed. So 2,10,000 you are left. And over here, whatever is the interest, you will transfer it to P or L. That is 1876. Correct, chartered. This is your full solution, you can see. Simple. Question number 9, chartered. Remo Limited held 1st April 2021 1,009% government securities at rupees 90,000. At means cost. Face value 100 each. 3 months interest accrued on the above date. If 3 months interest is accrued chartered, that means interest is received on 30th of June and 31st of December. If interest is received on 31st December, then only till 1st of April, 3 months ka interest, that is January, February, March will be accrued. Yes, no? Yes, sir. If interest is accrued on 30th June and 31st of December, then only 3 months interest will be accrued, that is January, February, March. Correct? On 1st May, the company purchased some government securities of the face value 80,000 1st June. So again on 1st November, 1st May, the company purchased some government securities of the face value 80,000 at 95 come interest. Then on 1st June, face value was sold 94 come interest on security. Interest on security is paid on 30th of June and 31st of December and credited to bank on the same day. 30th September, 40,000 face value of government securities sold at 97 come interest. On 1st December, purchase same security at 10,000 at par X interest. On 1st March, company sold rupees 10,000 face value of government securities at 95 X interest. You are required to drop 9% government security account in the books of REMO. FIFO method shall be followed. Calculation should be made to the nearest multiple, rupee or multiple thereof. Now charted. Solution to question 9. Now charted. Step 1. Statement of investments. Now the rate of interest is 9%. Date of interest is 30th of June and 31st of December. We are following FIFO method. And year ending is 31st March. Date, particulars, nominal value, interest, cost, selling price, profit. Correct charted? Now you have to read the question. The first is Remo Limited held on 1st April 2001 So 1st April before 1st April, last date of interest would have been 30th, 1st December 00. 31st. Why? Because the interest dates are 30th June and 31st December. So we are starting our year on 1st April 2021. So previous date of interest would have been 31st of December 20. Just before April charter, just before April, interest would have been on 31st of December. Our transaction starts on 1st April 2021. Held, that means opening balance 1000 into 100, that is 1 lakhs. Interest is equal to 1 lakh into 9% into 3 by 12 into 9% into 3 by 12. So 1 lakh 2250. And the cost is 90,000. Correct? Thereafter, Thereafter, 3 months interest on 1st May, company purchased the same government securities of the face value 80,095 come interest. Correct? First, three months. 1st May 2021. Purchases. How many months ka interest? January, February, March, April. Correct? That is how many months? 4 months. Nominal value 80,000. Interest is equal to 80,000 into 9% into 4 by 12 is equal to how much? 2,400. Cost 80,000 into 95% because it is come interest minus 95% if nominal value is 100. Nominal value is 100 and purchase price is 95. So I can say it is 95% of nominal value. Correct? No. Minus 2,400 because it is come interest. So 80,000 into 95% minus 73,600. Correct. Then first 6650 1,63,600. First June. Charted 1st June को we have sold. 1st June 60,000 face value. The security was sold for 94 come interest. 1st June 2021. That is how many months? Starting say 1st June तक 31st December to 1st June is how many months? 5 months. Sold how much? 60,000. Correct. Interest 60,000 multiplied by 9% into 5 by 12. That comes to 2250. Correct. And this 60,000 is sold out of opening balance. This 60,000 is sold out of opening balance. 1 lakh ka cost is 90,000. 60,000 ka cost will be how much? FIFO basis we are following. First in, first up. 1 lakh ka cost is 90,000. 60,000 ka cost will be how much? 60,000 into 90,000 divided by 1 lakh. That comes to 54. And you sold it for how much? Selling price you sold it for 94 come interest. It is 60,000 into 94% minus 2250. That is 60,000 into 94% minus 54,150. On 50,000 is the cost. 54,000 is the cost charted, and you sold it for 54,150. So 150 is your profit. Correct. After 1st of June, you are left with 1,20,000 4400 minus 54,150. 163,600 minus 54. Correct. Now, June 30 को interest, it is 1,20,000 into 9%, so 6 by 12. That comes to 5,400. 1,20,000. Correct. Now, thereafter chartered, it is 1st June हो गया, 30th June, 31st December, 30th September, 40,000 of 40,000 face value of government securities is sold for 97 cum interest. 40,000, which date we sold? 30th. How many months? 3 months. Sold 40,000 face value of government securities. Interest will be 40,000 into 9% into 3 by 12. 40,000 into 9% into 3 by 12 is equal to 900. Correct? Cost. This is also sold out of opening balance. So 90,000, 40,000 into 90,000 divided by 1 lakh. That is 36,000. Selling price is 40,000. 40,097 come interest. To 97% minus 900. So 40,000 into 97% minus 900. Why minus 900? Because it is come interest. So 37,900 and profit is equal to 1,900. So chartered, and now we are left with 80,000 negative 1,900, 1,09,600 minus 73,600. After that, 1st December. 1st December, company purchased same security 10,000 at par X interest. 1st December. So from 30th June to 1st December is 5 months. From 30th of June to 1st December, it is 5 months. 30th June was the last date of interest. You are purchasing on 1st December. So September, July, August, September, October, November, 5 months. July, August, September, October, November, 5 months. So 30th June to 1st December is 5 months. So you purchased. You purchased how much? 10,000. Interest is equal to 10,000 into 9% into 5 by 12. 10,000 into 9% into 5 divided by 12. 375 you are supposed to pay interest from whomever you have purchased. 375 is the interest you are supposed to pay from whomever you have purchased, and you have purchased it for 10,000 at par. So 90,000 83,600. Then 31st of December you will receive interest. 31st of December 2021, interest on what value? 90,000. 90,000 per 6 months का interest, that is June to December. 90,000 into 9% into 6 months का interest, that is June to December. That is 90,000 into 9%, 4050. Now 5575. After 31st of December, 1st of March. 1st of March मतलब January, February, 2 months. 2 months. You have last date of interest is 31st of December. So 31st of December, 31st of December to 1st March is how many months? 2 months. You sold 10,000. Face value at 95x interest. So interest will be for 2 months, that is 10,000 into 9% into 2 by 12. 10,000 into 9%, 150. Sold. Cost will be how much? This 90 you would have sold it. This is entirely sold. First you sold 60, then you sold 40. So this 90 is sold from this 80,000. 80,000 ka cost is 73,600. So 10,000 into 73,600 divided by 80,000. 73,600 divided by 8. 9,200. And you sold it at selling price is equal to 10,000 into 95% x interest. Since it is x interest, will not subtract interest. Since it is x interest, will not subtract interest. 9,200, you sold it for 9,500, 300 is the profit. Correct, chartered. That's it. Now 31st of March. Now 31st of March. Five, 5, 7, 5. then 83,600 minus 83,600 minus 74,400. 74,400. Accrued interest. Accrued interest is equal to 80,000 into 3 by 12. So 5725 9 4640. This is 2 negative 3,900 3525 4050. So 3525 plus 4050 7575 7725 and 1800. 9525 is the amount transferred to P&L. This could be balancing figure of interest column also. This could become balancing figure of interest column also charted. Am I clear? So entire working is done. There are two ways you can do it. Either you can go on doing small workings, or you can prepare this statement and finish off in one working. Am I clear? The choice is definitely yours. Now, in the books of Remo Limited, %9 government securities investment account. Date, particulars, nominal value, cost, interest, cost, nominal value, interest and cost. Now, charted on 1st of April, on 1st of April 21, we had opening balance of 1 lakh nominal value. Now you can just see the table here and go on copying. 1 lakh interest 2250 and cost is how much? 90,000. Keep on copying. Thereafter, 1st May you purchased. So to bank account how much? 80,000. Interest is how much? 2,400. Just see that working note and start copying. 73,600. Then 1st June you sold. Buy bank 60,000, interest 2250, selling price is 54,150, and there is a profit. Because of profit, entry will become investment to PL. Because of profit, entry will become investment to PL. So 1621 to PL for profit 150. 30th June 21, by bank we received interest. By bank we received interest of 5,400. Correct? Then after 30th of June, there is 30th of September we sold. How much we sold? 40,000 we sold, interest 900, and we sold it for 37,900. In that transaction, this is selling price. In that transaction, we made a profit of 1,900. So 30th September 2021 to P&L. Profit of 1900. Then 1st December we purchased bank. How much? 10,000 at par we had purchased. Interest is 375 and 10,000. At par we purchased. Then again 31st of December interest, 31st of December interest, buy bank to interest, because interest is income. Bank to interest, interest may buy bank. How much interest we have received? 4050 interest we have received. Correct? 1st March ko we sold. Bank to investment we sold 10,000. Interest 150, and we sold it for 9500. And 1st March ko we made a profit. How much ka profit? PL profit 300. Game over. 31st of March 2021. By balance carried down, 80,000 accrued interest 1800 and 74,400. 31st of March 2021 to P&L. Interest balancing figure 9525 is transferred to P&L. Correct, chartered? Yes or no? Yes, sir. Simple. So this statement is very important. So when you purchase, it will come on the debit side. When you sell, it will come on the credit side. Why? Because it is investment to bank for purchases, and it is bank to investment for sale. Correct? Investment to bank. Investment में to bank for purchase. Bank to investment to buy, bank for sale. When you received interest, it is bank to interest. So interest में buy bank. Correct? Question number 10, chartered. A fire occurred in the premises of Messrs. Star and Sons on 21st of March 2022. The concern had taken an insurance policy of rupees 75,000, subject to average cross. From the books of account, the following particulars are available relating to the period. So fire occurred on 21st of March. The concern had taken an insurance policy of 75,000. So this is policy value. Which was subject to average clause. From the books of account, the following particulars are available relating to the period 1st April 21 to 21st March. That means this is related to the period year starting to the date of fire. These details will help us calculate value of stock as on the date of fire and that is known as memorandum trading account. This trading account, we prepare this trading account with an objective to calculate physical value of goods lying in the godown as on the date of fire. Correct? Stock 1,50,500. That is opening stock. Purchases, including purchase of 40,000 for which purchase invoice has not been received. Purchase invoice is not received, but goods are physically received. So it should be included, it should not be included. If you have physically received the goods, it should be included in purchases. So what we are supposed to do with this 40,000? Ignore. Cost of goods distributed as free samples. So less from purchases because we have distributed the goods. Journal entries, advertisement to purchases. We have distributed the goods, purchase will reduce. Sales excluding goods sent on approval basis. So that will add. Approval has been received. So entire goods are approved. Approved ko we ignore it. Wages including salary of manager. Salary of manager goes to P&L. So we will take wages 65 minus 10. Purchase return will be subtracted from purchases. Cost of goods salvage, that is salvage, you are required to calculate the amount of claim. Now charted. Solution to question 10. Now, so step 1, calculation of GB percent is equal to 20% on sales. That is given in the question. Step 2. Memorandum trading account from 1st April 21 to 21st March 22. First thing is to opening stock 1,50,500 to purchases 17,000 less returns 15,000 and less goods distributed as advertisement, how much? 32. So how much we are left with? 2 lakh 70. By sales. Then Add sale on approval, which is not included. How much? Thereafter, to wages 55, to gross profit. Four lakh 90. That is 98. By closing stock, this stock we call it value of stock as on the date of fire. This stock we call it as value of stock as on the date of fire. That balancing figure comes to 83,500. Statement of claim. That is stock as on the date of fire 83,500 less salvage so loss is equal to P1 500. Since policy value rupees 71,500 is less than value of stock as on the date of fire, that is therefore average clause is applied. Correct? Amount of claim is equal to loss by value of stock as on the date of fire into policy value. That is 71,500 divided by the policy value is 75,000. rupees 64,222. Correct chartered? Yes or no? Yes, sir. Question number 11. The following particulars relate to hire purchase transactions. Are purchaser purchased 3 machines from S on hire purchase system. The cash price of the machine is 3 lakh. Cash price means if he would have purchased by giving the entire amount at one go, then the cash price would be 3 lakhs. The hire purchaser charged depreciation at the rate of 20% on written down value method. Okay. Purchaser. 2 machines were seized, repossessed. Seized matlab repossessed. Seized means repossessed by hire vendor when second installment was not paid at the end of second year. That is after 2 years, 2 machines were repossessed. One machine ka cost is 3 lakhs. 2 machines. Hire vendor valued 2 machines at cash price less depreciation, 30% depreciation charge for each of the years under written down value. Hire vendor spent 15,000 on repairs of machineries and sold them for 2,55,000. You are required to compute agreed value of machines taken by hire vendor, book value of machines, left with purchaser, then profit or loss and profit or loss on machines repossessed. So you're supposed to do only calculation, no accounting. Solution to question 11. Now, number 1. Calculation of two plant and machinery. Calculation of agreed value of two plant and machinery by hire vendor. Now, date particulars working amount. Cash price of two plant and machinery. That is one plant and machinery ka it is 3 lakhs. So 2 ka will become 6 lakhs. Year 1. Depreciation 30%. 1,80,000. So value remaining year 2. depreciation 30% of 4,20,000, that is 1,26,000. So agreed value is equal to this depreciation by hire vendor. That means the value at which hire vendor took the assets back is 2,94,000. Value at which hire vendor took back the asset is 2,94,000. Next thing, they have asked us to calculate book value of machines left with hire purchaser. Now, calculation of book value of one plant and machinery left with hire purchaser. Now, cash price of one plant and machinery one into 3 lakhs, 3 lakhs. Y1 depreciation by hire purchaser 20% of 3 lakh, that is Y2 by hire purchaser 20% 2 lakh $192. So 3. Calculation of profit or loss calculation of profit or loss to hire purchaser on goods repossessed. GR stands for beta goods repossessed. Now, date, amount. Yeah, we can do it in much shorter fashion, but I did not want to take a risk. We could have arams done this question in 4 to 5 lines only. Now, date. Book value of two plant and machinery repossessed. One plant and machinery का book value is 192, so two plant and machinery into book value as on the date of repossession will be 3,84,000. So in books of hire purchase the value was 384. Agreed value of two plant and machinery repossessed as per one above is 294. That means the asset which was appearing in purchasers book for 384 that has been taken over only at 294. In my books it was appearing at 384, but it is taken over at 294 only, thereby giving me a loss of how much? 90,000. Number 4. Profit or loss on sale of goods repossessed. GR is goods repossessed. Now, cost of by hire vendor 294, add expenses on goods repossessed, that is 3,09,000. Sold goods repossessed for 2,55,000. So cost is 309, but sold it for 255. Therefore, loss is how much? 54,000 chartered. Correct? Yes or no? Yes, sir. See you with question number 4. 3 lakh 9, 2 lakh 3 lakh 9 ka goods is sold it for 255. Thereby loss is 54,000 chartered. Correct? Question number 12. The following balances were extracted. Department accounts, it is simple. The following balances were extracted from the books of beta. You are required to prepare departmental trading and profit and loss account and general profit and loss account for the year ended. Opening stock, purchases, sales. General expenses incurred for both the departments are 7,50,000. You are also supplied with the following information. Closing stock of department A is 6 lakh, which includes goods from other department of 1 20. Cost to department A. At cost to department A means cost to receiving department. Cost to receiving department is invoice price. Because suppose 100 rupees ka goods, I give it to you at 120. So for me cost is 100, for you cost is 120. But your cost is invoice price only, no? Because 100 rupees ka goods I transferred to you at 120. Closing stock of department B is 12 lakh, including goods from department A 180. Opening stock of department A and B include goods of the value 60 and 90 taken from department B and A respectively at cost to transferee. Cost to transferee means cost to receiving department. The gross profit is uniform from year to year. If this is given, that means we are supposed to calculate unrealized profit on last year. Last year, opening stock, we are supposed to, listen to this sentence, we are supposed to calculate stock reserve on opening stock only if last year's GP is given or it is given that GP is same every year. Because opening stock of current year is closing stock of last year. So closing stock of last year means I want last year's GP percent. Either they should give me last year's GP percent or they should tell me GP is same year to year. If GP is same year to year, that means current year ka GP and last year ka GP is same. Shall we start? Yes, sir. Solution to question 12. First, we'll prepare departmental trading account. Particulars. Particulars department A, department B. To opening stock 3 lakh, 2 lakh 40. To purchases, we assume this purchases is including IDT. We assume this purchases is including IDT because how much goods have been transferred from one department to another department is not given. Since the amount transferred from one department to another department is not given, we assume that purchase and sales include IDT. So this is 54 lakhs 60,000 by sales 60 lakhs 90 lakhs. By closing stock to gross profit. Profits. Pi is a symbol of profit. Balancing figure 66 minus 42 is 102 minus 57. Correct? General PL. A 24 lakhs, B 45 lakhs, ₹69 lakhs. Correct? Now, to general expenses. ₹7,50,000. To unrealized profit on closing stock of A, B. By unrealized profit on closing stock of on opening stock of A, B. To net profit. Now, working notes. Calculation of GB percent. Calculation of GP percent. A, B. GP percentage is equal to GP by sales, and sales is including IDT. Sales is including IDT. So this will become 24 lakhs into 100. 40%. 45 lakhs by 50%. Now, calculation of unrealized profit. A, B. Opening stock, closing stock, opening stock, closing stock. Now, amount of IDT in opening stock of A. Opening stock of A. $30,000. 60,000. 60,000 and opening stock of B में 90. Closing stock. Closing stock of department A में 120. That means opening stock of A has B's stock to the extent of 60,000. Closing stock of A has B's stock to the extent of 1,20,000 and vice versa for B. GP percentage of supplying department. For B, for A, B is a supplying department. So 50%. And for B, A is a supplying department. 40%. 40%. So this comes to 30, 60, 36, 72. Now, closing stock of A $60, 30, 36. 30, 36 is opening, 60 and 72 is closing. Correct? 69, 66. So that gives you 60 lakhs. $84 balancing figure. Correct charted? No. Correct? Question number 13. Now charted, PQR has a branch in Houston, USA. Business of the branch is carried out substantially independently. That means branch is doing an independent way, accumulating cash, not giving it to head office and other monetary items incurring expense, generating income and borrowing in its local currency. That means monetary items ka purchase, incurring expenses, generating income, everything bank branch is doing it on its own. Therefore, we can say it is a non-integral foreign operation. If it is non-integral foreign operation chartered, if it is a non-integral foreign operation, then fixed assets should be at closing rate. If it is an integral foreign operation, then fixed asset should be at actual rate. If it is an integral foreign operation, it is an extension of the business, the way you would have studied in AS 11. If it is an extension of the business, that is known as integral foreign operation. And in case of integral foreign operation, fixed assets are valued at original rate. If the branch is doing completely independent business, we have just invested in the branch, head office has just invested money in the branch, then branch is said to be a non-integral foreign operation. And in case of non-integral foreign operation, fixed assets are valued at closing rate. Am I clear? So office equipment cost, accumulated depreciation 5,400, furniture 36, opening accumulated depreciation 6840, opening stock 24,500. Let's see the rates. This is opening, this is closing, and this is average. Correct. So this will be valued at 75, 75, closing rate 75, 75, opening stock at opening rate 64, purchase sales at average rate 72, 72, income expense at average rate. All these are current assets, current liabilities, closing rate 75, 75, 75, 75. Head office actuals. That means this would be given in terms of INR. Correct? Salaries outstanding. So salaries may we are supposed to add $600, add $600, and that we are supposed to show as outstanding salary also, $600 on the credit side, and that would be valued at 75 because that becomes a current liability. Outstanding salary should be valued at closing rate. Depreciate office for equipment and furniture at 10% of written down value. Okay, written down value means original cost minus provision for depreciation. Closing stock should be valued at closing rate, that is 75. You are informed that head office is showing a receivable from branch. Receivable from branch. Branch is saying payable to head office this many dollars. Head office is saying this many rupees receivable. So this dollars when converted into rupees will give you this much only. Office equipment you purchased during the year is 2,400. That means this asset was not there last year, you have purchased in the current year. One furniture carrying value 450 on 1/4, cost was 500. So cost 500, accumulated depreciation 50, so its carrying value becomes 450, has been sold on year end. Year end matlab again depreciated by 10%, 45, 10% I got it from adjustment number 2. So that will become 405, and you sold it also for 405. That means no profit or loss to Mr. M, and M say it will become receivable, and that will also be valued at 75. Correct? M has not paid the amount till the finalization. You are supposed to prepare no entry, and you are required to prepare trial balance after incorporating adjustments given and converting. All adjustments should be incorporated. That means everything should be inside trial balance. No problem. Calculation of depreciation on equipment. Now charted original cost at original cost on 1/4/21 is equal to how much? 56,400. Purchased on original cost on year ending 31st of March 2022. Purchased on 21. That means chartered original cost on 1/4/2021 is 54,000. Understood? 56,400 is the original cost at year end. 56,400 is the original cost year end. Out of this 2,400 we have purchased in the current year. That means remaining 56,400 minus 2,400, that is 54,000, is carried forward from last year. Correct? Similarly, let's call it A. Provision for depreciation 1/4/2021 is how much? 5400. 400. That means let's call this as B. Therefore, current year's depreciation will be 10% on opening WDV plus purchases in the current year, because purchase was made on 1. On opening WDV is minus 5,400 and current year ka purchase is 2,400. So 10% on 54 minus 5,400 plus 5100. This is current year's depreciation in equipment. You could have directly done 56,400 minus 5,400. But this gives you authenticity that this 5,400 is related to this asset and not 2,400. Correct? Now, calculation of depreciation on furniture. Original cost of as on this 36,000. Sold on 1/4, that is 500 original cost. So you are left with original cost of unsold on 35,500. Correct? provision for depreciation on 31st of March 2022. That is how much? 6840. Related to sold furniture $450. So related to unsold is now. So this is now. Now we are talking about sold part chartered. Sold part. Original cost on 1/4/21 500. Provision for depreciation on 1/4/21 50. Now, provision for depreciation 50. So you're left with 450. This is WDV on 1/4/21. Depreciation for 21-22 at the rate of 10%. 45. Correct? So you're left with WDV on 31st March 22, 405. Sold for 405. So no profit or loss. For depreciation for current year is equal to 10% of 35,500 minus 6790 plus 45. That is 35,500 minus 6790 is WDV into 10%, 2871 plus 45. This is depreciation on unsold part. Original cost minus provision for depreciation. Original cost minus provision for depreciation gives us written down value. 10% of written down value 2871 plus 45 on the sold part. That comes to 2916. Correct? Closing balance of provision for debtion is equal to 6840 was there minus 450, sorry, 50 minus 6840 plus 2916 for current year minus 50 minus 45 for the one which is sold. 6840 plus current year 2916 minus 95 9661. Correct, 9661. This is unsold opening balance plus current year's ka depreciation minus for the sold one, the one which is sold. If the asset is sold, we don't require its provision. So 45 current year ka, 50 last year ka. Am I clear? So opening balance plus current year's depreciation minus provision for depreciation which is sold. Correct? Now, trial balance. Particulars, debit, dollar, credit, dollar, conversion rate, debit, INR, credit, INR. First item is office equipment. Office equipment. 75. Correct? Then provision for depreciation on office equipment. $10,500. How did I get current years and closing balance of provision for depreciation on office equipment? Opening balance was 5,400 plus current year's 5,100 is 10,500. Correct? That is also valued at 75. Over here we subtracted this. Why? Because it is sold. Add current year's, let's sold wala provision. But in case of office equipment, there is no sales. How much? 787, 500. Depreciation on office equipment for current year. That is how much? 5100. That is also 75. 382, 500. So office equipment is over. Now furniture. $36,000 minus we have sold 500. So you are left with 35,500. 26,62,500. Then provision for depreciation on furniture. That is 9661. We have calculated. That is also 75. 24,500. Depreciation on furniture for current year. That is 2916, 218,700. Correct. Thereafter, opening stock 24,500, that is at opening rate 64, 15,68,000. Thereafter, purchases 96,500. Average rate 69,48. Sales 176,250. Average 72. 129 lakhs 90,000. Thereafter, carriage inward 256, that is 72. 18,432. After carriage inward, salaries 4250 plus 600, that is 4850. 1 minute. Acha, let me do this. 72. So 4850 into 700, 349, 200. Over here, receivable from M 405 because you sold it to him. 75, 30,375. Outstanding salaries 600, 75, 45,000. Rent and rates. Rent and rates is how much? 956. 72. 956 into 72, 68, 832. Correct? Trade receivables, trade payables, cash back. Trade receivables 12,560, 75. Trade payable 8650, 75. 48,750. Multiply. Bank 2540, 75. That is 37,500. Cash 500, 75. Sorry, 1 lakh, and this is 37,500. Then HO 37322. 7 actuals 20, 23 lakhs 75,614. Now chartered exchange difference you find out. That comes to credit side में 375 100. Correct. So the basic trick in this entire trial balance was calculation of this. That you have to first opening original cost, provision for depreciation is the balance, opening WDV, add purchases ka. Correct. So this you closing balance of provision for depreciation is opening balance of provision for depreciation, add current year's provision for depreciation, less provision for depreciation on those assets which you have sold at chartered. Am I clear? Now question number 14 chartered. The following information single entry it is accounting from incomplete records. The following information relates to the business of ABC Enterprises who request you to prepare trading and profit and loss account for the year ended 31st of March and the balance sheet as on that date. Assets and liabilities, furniture, opening closing difference of furniture account will prepare. Stock will go in trading, debtors account will prepare, creditors account will prepare, expense account, cash bank account and opening balance sheet, 6 working notes. Now, collection from debtors after allowing a discount. So, journal entry will become cash bank account debit 585, discount 15 to debtors 6 lakhs. Collection on discounting of bills of exchange after deduction of discount of 1250. So cash bank account debit 61,250 and discount 1250 to bills receivable 62,500. Creditors 4 lakh were paid 392. So creditors 4 lakh to cash bank 392 to discount received 8. Payment of freight, that is freight to cash bank. This will go in trading account. Now, payment for office furniture to cash bank. Investment carrying interest of 6% were purchased at 95,200 of the face value. So 200 into 95 is equal to investment to cash bank 19,000. Correct chartered. Now, and on this there will be accrued interest. Accrued interest will be on the face value, that is 20,200 into 100 into 6% into 6 by 12. So that will come to 600 rupees. That will go in PL credit and balance sheet asset. Expenses including salaries paid 95, expenses to cash bank. Miscellaneous receipts, cash bank to miscellaneous receipt. Correct. Now, this accrued interest is for 6 months from 1st of October to the next 31st of March. Bills of exchange drawn on and accepted by customers during the year amounted to 1 lakh. That is bills receivable to debtors. Of these bills of exchange, 20,000 were endorsed to creditors. Creditors to bills receivable. An endorsed bill of exchange was dishonored. Endorsed bill was dishonored. That means you received a bill from debtor, you gave it to creditor, and that bill got dishonored. So you are supposed to receive from debtors and pay to creditors. Goods costing 9,000 were distributed. So advertisement to purchases. Goods are invariably sold to show a gross profit of 20% on sales. That means chartered, if selling price is equal to 100, profit is equal to 20, cost is equal to 80. That means we can say 20 by 80 is 25% on cost. 20% on sales. If sales is 100, profit is 20, cost is 80. 20 by 80 into 100 is 25% on cost. Difference in cash book is to be treated as further drawings or introduction. Provide 2% for doubtful debts. Let's start chartered. Number 1. Furniture. Number 2, debtors account. Number 3, creditors account. Number 4, bills receivable account. Number 5, expense account, cash bank. Seven, opening balance sheet. Number 8, trading account. PL. Capital. Capital account. Balance sheet. Furniture. Opening balance 60, closing 63,500. Asset opening balance on the debit side, closing balance on the credit side. Correct? Stock opening balance on trading account, opening stock 80,000, closing stock 70,000. Debtors opening balance 1,60,000, closing we don't know. Creditors opening balance 1,10,000, liability opening balance on the credit side, closing 1,50,000. Correct? Then prepaid expense. Prepaid expense is an asset. Opening balance on debit side, opening prepaid 6,000, closing prepaid 7,000. Outstanding expense is a liability opening balance, opening outstanding 18,000. Closing outstanding, sorry, opening is 20, closing is 18. Correct? Cash bank opening 12, closing 26,250. So all balances we have written. Yes, no. Stock you want to say? Correct? No. Everybody has done this much posting, yes. This all opening assets will come in opening balance sheet. Furniture 60,000. Then stock 80. Then debtors 160. Then creditors 1,10,000. Then prepaid expense asset 6. Outstanding expense 20. Cash bank 12. Closing balance sheet. Furniture 63,500. Thereafter stock 70. Debtors inner column PDD, that will come in PL, 2 PDD. We'll calculate and write later on. There is a PDD given. Creditors 150. Then prepaid expense. Prepaid expense 7,000. Outstanding expense 18,000. Cash and bank 26,250. Correct? Collection from debtors. तो debtors में by cash bank 585, by discount allowed 15. By cash bank 585 and by discount allowed 15. So cash book में two debtors 585 and P&L में two discount allowed 15. Then bills of exchange, then bills receivable में by cash bank by discount allowed 1250. तो कैश बैंक में बिल्स रिसीवेबल 61,250, P&L में discounting charges 1250. Creditors we are paying by cash bank 392 and discount received 8. तो कैश बैंक में बाय क्रेडिटर्स 392 और पीएनएल में डिस्काउंट रिसीव्ड 8000. Thereafter payment of freight how much? 30,000. ट्रेडिंग में फ्रेट 30,000. अमाउंट ड्रॉन फॉर पर्सनल यूज कैश बैंक में ड्रॉइंग्स 70,000. कैपिटल में 2 ड्रॉइंग्स 70,000. पेमेंट ऑफ फर्नीचर तो कैश बैंक में बाय फर्नीचर 10. फर्नीचर अकाउंट में ये परचेज्ड 10 डेबिट फर्नीचर टू कैश बैंक. इन्वेस्टमेंट कैश बुक में बाय इन्वेस्टमेंट 19. क्लोजिंग बैलेंस शीट में investment 19. On this there is an accrued interest. So P&L में I am writing accrued interest. We had calculated 600. This is accrued interest 600. Correct. Thereafter expenses paid 95. तो कैश बुक में 95 एक्सपेंसेस में टू कैश बैंक 95. बिल्स ऑफ एक्सचेंज मिसलेनियस रिसीट्स 5 तो कैश बुक में 2 मिसलेनियस रिसीट्स 5 एंड पीएनएल क्रेडिट में मिसलेनियस रिसीट्स 5. करेक्ट. Thereafter, goods costing rupees 9,000 were used as advertising material. Advertising to purchases. To purchases less advertisement 9 और P&L में to advertisement 9. Then GP is there that we'll do in the end. Difference in the cash book and provision for doubtful debts. Now chartered, let's furniture 70 का furniture has become 63,500. that means difference 6,500 is depreciation. Oh, one adjustment is left, no? That is bills of exchange drawn 1 lakh. That is BR2 debtors. Debtors में buy bills receivable. Then 20,000 was endorsed. Creditors to bills receivable. Bills receivable में buy creditors. 4,000 का bills receivable dishonored. debtors to creditors, 4,000, sorry, debtors to creditors, correct. Now debtors may say two figures are missing. One is debtors to sales, so let's wait. Creditors say we'll get purchases, so by purchases find out the balancing figure, 392, 420, 570, and that will come to this. Purchases will go here. P&L may have not written depreciation, no? So let me write it without forgetting. Depreciation 6,500. Thereafter, capital will come in the end. Bills risk 1 lakh, 80 minus 62, 500. 17,500 is the balancing figure, closing balance. That will go in balance sheet. Bills receivable 17,500. So debtors expenses will get PL 27 or 24, 392. So PL will get 92,000 as expenses. That will go in P&L. Now chartered. Cash bank 12, 585, 61, 250, 5,000, 30, 10, 19, 95, 392, 70. So 12,000 plus 585 plus 61, 250 plus 5,000 minus drawings balancing figure 21. This is further drawings 21, and this will go in again capital. Two drawings. Opening balance sheet. Opening balance sheet. $60 plus 80 plus 160 plus 6 plus 12 minus 188. Capital balancing figure 188. This is opening balance of capital. So capital account में balance brought down 188. Now trading account में 456 minus 9, 447. Now charted to GP. 80 cost of goods sold. 80,000 plus 30,000 plus 447 minus 70. Divided by 4. 447. 487. 121 750. Now, how did I get 487? That is nothing but cost of goods sold. It is 80,000 plus 30,000 plus 447 minus 70. It was 20% on sales or 25% on cost. The cost of goods sold we find out uska 25%. So balancing figure will get sales. That sales will come to 1,608,750. So trading account mein this is balancing figure. Gross profit I wrote it in PL. And sales will go in debtors account. Debtors account balancing figure is 72,750. Branch account mein closing stock I had written over there, but closing stock is branch account mein I had not written, that is 24,650 US dollars into rupees 75, that is 18,48,750. Correct chartered? Branch account mein closing stock I had not written. Suddenly I remembered. Debtors is 72. 72,750. 72,750 into 2%. 2%. 1455. 71,295. 72,750 minus 2%. And this provision will go here 1455. Correct? $92,900 250. So to net profit 10,145. This net profit will go in capital. 188 plus 10,145 minus 91,000 is equal to 107,145. carried down 107145. This is capital chartered. Now you tally. 63 500, 19 600, 70,000, 71295, 17 500, 26 250 and 7,000. 275 145, 275 145. So all balancing figure is known, chartered. Correct. Bye bye.